Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. Ladies and gentlemen, I'm on a mission to help 1 million people reduce risk in their lives. To join me, go to myworstinvestmentever.com and sign up for my weekly free Become a Better Investor newsletter, where I share how to reduce risk and create, grow, and protect your wealth. Fellow risk takers, this is your worst podcast host, Andrew Stotz from A Stotz Academy, and I'm here with featured guest Paul Krake. Paul, are you ready to join the mission?
Yes, Andrew, I am. After that introduction, I certainly am. I'm sold.
Well, the introduction is going to get even better because I'm going to talk about you. So let me introduce you to the audience. Paul is a global strategist focused on mega themes of climate, China, digitization, and demographics. View from the Peak, Paul's consultancy, was formed in 2011 after an 18-year career in investment banking and as a macro hedge fund manager, where he covers global institutions on these mega themes. His latest venture is Climate Transformed, a global community of climate investors, entrepreneurs, and corporate leaders who are practically implementing the $100 trillion investment required for us to achieve decarbonization and sustainability. My goodness, Paul, take a minute and tell us about the unique value that you're bringing to this wonderful world.
It's a pretty grandiose effort. It's pretty arrogant of me, Andrew, to think that I can actually challenge those things with words like $100 trillion and mega themes and the like. But, I think that, the unique value, and I like the way you sort of phrase that. And I think it's important that everyone who does what I do, trying to be a purveyor of information, is able to clearly define what their unique value is. And I think that the one thing that I've always tried to do, successfully sometimes, not successfully others, is to take these very big picture views of the world, and to boil them down into very simple logic, but actionable bite-sized pieces, right? So if I was thinking what in the general context of the worst things that I've done, which the list is long and illustrious, one of the big challenges that I face currently is convincing the trading community, whether that's in the public equity, macro, and the like, to actually give a shit about climate. And the problem that we've had, one of the problems that I have, is that we are competing with a framework which is ESG, and I don't want to get into the bashing of ESG because I think it does enough of the self-destruction itself to be able to get there. To convince people that ESG and impact and the way we're thinking about it now is not how we get to net zero, right? So I use this comment a lot that, of course, we would interview Greta Thunberg on Climate Transformed, right? So Climate Transformed, what we do is our goal this year is 500 hours of interviews with the leadership charged with taking us to decarbonisation and sustainability. Of course, I would interview Greta Thunberg, right? But we interview a lot of lawyers. We interview a lot of entrepreneurs. We interview the folks who are getting their hands dirty in the implementation of $100 trillion of infrastructure that's required to get there, right? The best example is the whole notion of those advocates to defund oil and gas, right? You want to derail the climate agenda? Well, start by derailing the global economy first, because that $100 trillion needs to come from somewhere. It comes from government. It comes from public sector, private sector. No one body can do this alone. This is not a capitalist endeavor. This is not a socialist endeavor. This is an everyone endeavor. So the frustration I have, one of my biggest frustrations now in taking those mega themes and putting them into bite-sized packages, is to convince a macro investor who lives on a 90-day rolling cycle that the trillions of dollars of infrastructure spending that we will witness in the next 30 years, tens of trillions of dollars, is going to matter to dollar yen treasuries, the stocks that they punt on a 90-day view, right? At the moment, I'm fighting a losing battle in that. They will care eventually. It's going to matter. It's the equivalent of a macro investor not caring about Google in 2002. Because at the end of the day, I think about it like this. This is the biggest investment narrative that we will ever deal with. You're not going to get $100 trillion spent on AI, right? You're not getting $100 trillion spent on the genome, right? But you will have a global, coordinated government, corporate, consumer effort to get us to net zero. We may not like what the consequences are. It is going to be a big hit to global profitability as we pay for carbon for the first time, right? But the reality is that the Inflation Reduction Act, the European Green Deal, these sort of measures are just going to be amplified and amplified and amplified. And that's going to be the reason why folks will eventually have to care.
And if we were to go ahead, let's say, I don't know, 50 years, and that 100 trillion has been spent, and we've achieved the goals that you've talked about, where did that come from? Like, what amount of that would have come from the government versus what amount would have come from, and let's say the government's getting taxes from, companies and individuals, but let's say also companies would have to suffer in some way on their bottom line if they have to start incorporating this additional cost. Is it 50-50 direct from companies? And of course, the individual pays because they're buying the products and services from companies. But I'm just curious, like, how do you see that role?
But there's a wonderful guy by the name of David Carlin who works for the UN, who runs a group within the UN Environmental Program, runs all the financial initiatives program there. And what the work that David does is that he looks at these macro themes, saying we need to spend $25 trillion on electricity, and we need to spend $15 trillion on agriculture, and just biggest of big picture thought processes, right? The numbers that David comes up with are predominantly from the private sector, but the risk, it's. I think, can I rephrase the question a little bit, right?
Yeah.
It's not about where it comes from; it's how the money is levered. So one of the best programs that exists globally is actually here in the United States with the Department of Energy loan programs, right? Now, to take that a step further, where the DOE, for example, with these grant and loan programs that exist, would do even better would be to take, instead of doing a $400 million grant to a particular company, turn that into $4 billion of the 10% first loss loan guarantees, right? To allow Citibank to deploy $4 billion of debt, right, to 10 $400 million ventures, right? Those sort of things. So I think it's the number of $100 trillion is, you've got to think about this. A lot of this money is going to be created, right, through the magic of the magic of the banking system. But I think things like where this is going to work really efficiently is with things like loan guarantees, first loss provisioning, those sorts of things.
Okay. And maybe I'll just explain that for the listeners. So for those people that may not get that, the idea is that maybe it's better for the private sector to assess the projects and distribute the funds and monitor the projects, but they may not want to do it because of the risks and the costs, and therefore by government coming in and providing some sort of guarantee for a portion of that, it incentivizes them to make those loans that they may not make if they weren't incentivized. Is that correct? And how?
Yeah, exactly right. So here's a good example. So electric vehicles in the United States, right? Consumers in the United States, in the aggregate, don't want electric vehicles. They don't trust the range anxiety. The infrastructure is not there from a charging standpoint. You can make an argument that certainly the fact that we haven't reached cost parity because an EV is just that much more expensive, right? We know that we need to electrify mobility if we've got any chance of getting to net zero, right? And Ford has announced a $10 billion EV program and the like. And the trouble is that Ford is spending all its money on R&D on cars that people currently don't want to buy, right? That sounds like a really shitty business model to me, right? So what's going to have to happen is you're going to have more and more incentives coming through from government to bring the price down of EVs, right? Because there ain't no net zero without electric mobility, right? So you have to get there. So if the technology is not keeping up, which battery range anxiety implies that currently it isn't, right? Cost is really inhibitive. The price of lithium, is in 2022 was up 4x, right? So the cost of a lithium ion battery went up for the first time in 2022, which debunks any sorts of Moore's law for batteries, right? How do you convince, or how do you convince a consumer that doesn't want the product to buy the product because it's in the social good? Well, the way you do that is through incentives, and the Inflation Reduction Act is littered with that sort of thing. But I tell people all the time, I want every American out there to retire the French socialist jokes, because Francois Mitterrand would have been proud of the public subsidies that are going on in the Inflation Reduction Act, which are essential to get this thing moving.
One other question on that, it's kind of personal, and that is, Thailand's every year about this time we go through a heavy level of pollution across the country, particularly in the north of Thailand, but also in Bangkok. It's pretty severe, and the major cause of that is crop burning. And crop burning is illegal in Thailand, but yet, it just happens at large scale, as well as across Southeast Asia.
Indonesia, Malaysia, Singapore gets covered in smoke about 3 times a year.
Yeah, so let's forget about the cross-country issues of how countries work together on that. Let's just look domestically, and what would a country like Thailand need to do? I mean, I had some ideas, but I really don't know the solution to this, and it's a challenge. But if it could be solved, I've judged in a lot of case competitions in Thailand at universities, and I can't tell you the number of them that have come up with the idea of driving around a diesel truck to go pick up the waste from the farms and then take it somewhere and process it. But the transportation cost ends up being so high. And so you just end up in this situation where the only option for a very poor farmer is to burn, and the government just doesn't enforce that, the law on that. And I'm just curious if you had any thoughts, or if you've seen cases where other countries have dealt with that.
Well, mate, they're not. The short answer, countries are not. And the only way you solve this is through cheap technology. It's through cheap hardware, right? Whether that's, again, it's different. It's sustainable farming techniques are, there's tens of billions of dollars being deployed at scale to make farming more sustainable, to make sure that sugarcane crops don't have to be burnt, and deforestation in the Amazon. We know all those stories, right? Yeah. The only solution is state sponsored technology to give farmers the tools that they need to make sure they don't do this, right? Look, it's not like the rural Asian farmer, right? The rural Asian communities don't have access to mobile banking, right? They do. They have access to mobile banking, right? So there is, there's, the electrification of villages across all of Asia is going on at an unprecedented rate, and it's all because of cheap solar, right? Yeah. It's not like these places are utterly backward and immune from the benefits of, generally speaking, historically Western produced technologies, but increasingly so there's innovation going on all over the world, and it's a function, again, it's at this stage of the cycle, you need to, the cost of this technology is inhibiting for those farmers, right? You need to have government subsidies to ensure that they can be adopted.
Yeah, and I've seen some harvesting stuff for instance, maize that captures the waste and then bales it, and then they can sell it. One of the interesting things, Asia very well, and when I first came to Thailand, I was like, oh, it's all these small scale farmers. They really need to industrialize farming. And then what I started to realize is that there's a reason why the government kind of didn't want to do that, and there's many different reasons, but ultimately it's about people kind of losing their control of their little farms and their little lives. And then when we had the Asian crisis in '97, when we had the COVID situation, those small scale farms are like, that's the retirement plan for a huge portion of the population. Many people just went back and were able to subsist. But in order to get the technology out to the farms, there's probably a consolidation that needs to happen. And sometimes you feel like, okay, that just has to happen. And on the other hand, you feel like, I hope it doesn't, because it's kind of one of the things that's been a real safety net, protecting people from really government, and you could even say maybe business.
Yeah, I don't think. Look, I think it's and it's not just an emerging economy issue. I mean, take a state in the US like West Virginia, which is going to be one, depending on which side of the fence you sit on, it's an economic revival or an economic upheaval, the transition away from coal to something more sustainable. Now, it's incredibly complicated. It's socially dislocating, because a coal miner is not going to get a job as a software engineer at a new wind farm, right? It's just not going to happen. And this whole notion of retraining, requalifications, and the like is really, I think, it's a white educated liberal dream that you can do that, and practically it's not. It doesn't matter. And the issue is that you have situations like Donald Trump getting elected, because you have communities around the place that are being disenfranchised because of changes in this incredible economic transition from 150 years of fossil fuel dependence to something more. And I think that, again, going back to the practicality that we focus on at Climate Transformed, you need to think about what is going to happen to those West Virginia communities. You need to think what's going to happen to those Thai farming communities, right? Who they may have been families who have been on those plots of lands for multiple generations, and to say to them that they need to merge, they need to transition, they need to look. Farming is a really crappy business. It's a single digit margin business, right? To go in and tell them that they, in the US context, for example, that you need to go and buy a $200,000 John Deere environmentally friendly combine harvester. Well, no, right? Farmers don't need another app, right? They need to find a way that they can take their very unstable business, which is made unstable by the weather. You can make an argument made even more unstable because of climate change, and to give them a real economic reason for these transition to occur, right? Because, again, these farming communities have been wiped out because of weather for years. To tell them that they need to spend thousands of dollars that they don't already have on equipment that they don't think they need, you've got to give them a real reason for that. And that's a global problem.
One last thing you mentioned, I grew up in Ohio, and in northeastern Ohio, which was originally oil refining with Rockefeller and Standard Oil, and then it moved into manufacturing, cars, Detroit and Cleveland. And I moved there in 1977 when I was young with my mom and dad. My father sold plastics for DuPont. He had a PhD in organic chemistry. He later went into recycling at the end of his career at DuPont. But one of the things that I left Ohio in 1986, and I went to California, got educated, and then I went to Thailand. I was going the exact direction, I was heading to the job creations, and the jobs, I didn't realize it, but when I went back to Ohio, it was hollowed out. And because of China, and you can't really fight a force of hundreds of millions of low cost, eager people entering the workforce, as what happened in China. But it's interesting how most Americans can't see, in particular, I would say from the Democrat Party, that there was this group of not particularly wealthy white citizens of America that lost their jobs and lost everything, and drug addiction and all of that. And then all of a sudden, someone like Donald Trump saw that and he went for it. And it's a little bit like we saw in Thailand with Thaksin Shinawatra, where he was one of the most successful prime ministers as far as getting voted, because he saw where the people were, and
He was
he
the first.
saw
He
their
was
suffering.
one of the first true populists.
Yeah, and he saw
Right.
where the people were, and they were in the Northeast and mainly, and then a little bit in the North, where he was originally from. And so he went after it, and he brought them benefit, which just infuriated the Bangkok population, who had never seen, money and benefits flowing out to the provinces to that level. And so, I think that it's important to understand. You talked about it at the beginning about your ability to see the big picture, and that's why view from the peak is a great demonstration of that, because looking at that big picture, and I think that you have hit upon a theme I'm sure that you've talked about a lot with your clients. So I want to get on to our big question, but for those people who want to learn more about what you're doing as far as climates, maybe you can just talk about your podcast and what they get from it, and
yeah. Well, it's sort of people that we don't have well, we have a podcast, but I mean, our whole thing is about the video content that we have on climatetransform.com, which is I think 400 plus hours of interviews that we've got up there now. Ranging. We did two interviews today on voluntary carbon markets. Andrew, I have what we call a profitless empire, because I went into this with no clear definable business model in mind, apart from having a platform to answer these practical questions. So look, use Climate Transformed as the tool that it is to inform to inform you on whether it's venture capital investment, private equity. But I think what I would say is I actively encourage public market investors to get on there, because again, on a 90 rolling 3-month basis, right? It may not drive the US 2-year note, or may not drive the price of copper, but I can tell you with a lot of confidence that we're going to be in a 10-year deficit as this government-backed EV adoption goes on around the world. And put it this way: if you want to short copper structurally, you do so at your peril, because this mega theme is going to structurally drive the price of copper over the next 2, 3, 5 years.
Fantastic. Well, ladies and gentlemen, just go to climatetransform.com and check it out and learn more. I think our discussion is interesting. I could go on for a long time on that. So I enjoyed our discussion, but now it's time to share your worst investment ever. And since no one goes into their worst investment thinking it will be, tell us a bit about the circumstances leading up to it, and then tell us your story, which may be a little bit of a different angle. Take it away.
I think, yeah, Andrew, I am going to take a little bit of a different angle, because I don't think there's no bad ideas. It's the idea side of things, that's the easy bit, right? There are just bad risk managers. And I think that if I was to say, think about my worst idea was actually a change of job. And my worst trade or worst investment was leaving Caxton Associates in 2004 to start my own hedge fund. It's not that I didn't learn a lot at my hedge fund that I had for 4.5 years, but it was that I started that hedge fund for the wrong reasons. Back then, it was an easy environment to raise capital, right? So when someone dangles a couple of $100 million in front of you, you jump. If you're someone who, with the value of hindsight, clearly had a big ego at the time, who was seduced by the wanting to have your name on the door, you left the comfort's the wrong word, but the familiarity, the hedge fund university that was Caxton Associates, or More Capital, or Soros, as they were back then, because you learned so much. I mean, I had, in the space of 5 years, had the pleasure of working for Lewis Bacon and Bruce Covenant, right? In 2004, I could not say I was learning so much at the time, and and a lot of it by osmosis and not actually appreciating what I was actually learning. Look, following a guy like Bruce, who was just a legend in this industry, right? And long story short, Andrew, my father passed away in November 2004, and I got married around the same time. And I remember being at my dad just a couple of days after my dad's funeral at my mum's place, and I'd flown from the US, and was jet lagged, so I was up at like 4 in the morning, just sort of sitting in the backyard, and I had an idea to start a fund, right? And it was one of those sort of moments where I just, pardon my language, just said, fuck it, I'm going to do this. And it was such the wrong timing. It was such the wrong reason. And it was just wrong on a myriad of levels. And I think that there was such a degree of emotion that went on with this decision that it was not done with the clarity of sitting down saying, what am I going to give up? What am I giving up on? And if I look back at the people who worked at Caxton, who one of the great, hedge funds have this reputation of turning over people consistently, like just they churn people. That wasn't Caxton. That wasn't what it was. And I worked for this fabulous gentleman by the name of Roy Lennox, who was just one of the nicest human beings on the planet. There was some great macro thinkers at the firm. And I think that there was a guy called by the name of John Macon, who was the chief economist, who unfortunately passed about 3 or 4 years ago, who was the chief economist, who was the head of the American Enterprise Institute. Just great people. So I launched this business, and it was a good time to launch. I was seated by a fabulous individual named Dwight Anderson, who was running a fund called Osprey, and I remain friends with Dwight to this day, and a lot of the Osprey crew are still great friends. But that was no substitute for having that training ground, which was watching a guy like Bruce do what he does each day. I am often utterly stunned when I talk to other traders about the stupidity that comes out of a lot of traders' mouths in terms of their theories on the Fed being rigged and all this sort of stuff, and they've made multiples of money that I will ever see. And it's not the ideas that matter, it's the risk. And Bruce was that incredible hybrid of just this incredible intellect, right? But at the end of the day, he was a grassroots gut feel trader that had no emotion or sentiment to anything he did. And it was just a fabulous combination. And I think Lewis Bacon is the same. The passion, because I'm sure that there's a slew of people who've come on and given their worst trades. And if you boil down what went wrong with those trades, is they allowed themselves to get wedded to these positions, that their egos took over, that they knew more than the marketplace. Right? That's Paul Tudor Jones doesn't do that. Lewis Bacon doesn't do that. Bruce Kovner doesn't do that. Right? And I think that if there's, obviously there's, if you run a $10 billion macro hedge fund and you're worth billions of dollars, yes, you have a bit of a big ego, right? There's not many big macro managers out there that don't. But I think there's a difference between having a big ego outside of trading and humility within the trading realm. And I think that me starting my own hedge fund proved that I did not have that humility.
And how did it end up with the hedge fund? And then, how did you go from that to moving on?
How did it? So in 2000, towards the start of 2008, I went through the double whammy of separating from my wife, and realizing that I just couldn't do this anymore. That realizing that I'd made a mistake, that I wasn't emotionally prepared, mature enough to do what I was doing. I had plenty of support. I had a great business partner named Cindy Ponder, who remains a dear friend to this day. I worked with a guy named Ashley Cox, who is my best friend to this day. And the one saving grace through all of this is that our friendship survived what was a very tumultuous period. And for me, that's the one saving grace in all of that. but the decision, like when I separated from my wife, I realized you can't run a fund. You can't run a fund and go through divorce at the same time. I think it's, it's just emotionally impossible. I think it's if you view, as I do, that you're a steward of other people's money and you are a fiduciary, then I think you've got to pick one or the other, and that's the reason why I decided to take 2 years off and then eventually start View from the Peak in early 2011.
So how would you summarize the lessons that you learned from that?
But I think it's all about humility. That things are you're for every good idea out there, there is a million ways for it to go wrong that you can't think about. I look at my climate business right now that we're now trying to find ways to monetize. And the thoughts that I had about how I would monetize this business are different than what I originally thought, because I thought that everyone would care. I literally thought all I'd need to do is to walk into every investment firm in the world and go, it's $100 trillion narrative. That's why you have to care.
Get on the train.
And get on the train. And they don't. And it's much more nuanced than that. It is, but it's more nuanced than just focusing on people who care about the climate and the like, and being this is, whether it's catalytic investment or if it's just anything around thing that's socially responsible. It is a much more nuanced discussion. I think it is I'm as bullish I am in terms of the business of climate as I have ever been, because still, Andrew, it's $100 trillion.
Yeah.
It's a lot. Right? It's a lot of money, right? So I think that there's still that has to be taken into account. I describe it this way. It's as I said before, it's the equivalent of 2002 not caring about Google. It's, investment firms that don't have climate analysts are like investment firms in 2002 that didn't have a tech analyst.
Yeah.
Right, who didn't know about mobile, who didn't know about the cloud, right, who didn't know about electrification of vehicles, who didn't know about renewable energy. Right. And things can ebb and flow in cycles, but these are such defining technologies for the global economy. I mean, the global economy is going to wean itself off oil and gas in the next 40 years. Oil will be a secondary product in the next 40 years.
So
right.
Maybe I'll summarize a couple of things I take away from your story that I think are, really interesting to think about for the listener. There was, who was it? Was it Richard Branson that said, "Screw it, let's do it"? You said, "F it, I'm gonna do this." And I think the first lesson I take away is that when you get that feeling of like that wind of confidence that comes to you, where you're like, "Let's do it," take a step back.
Walk around the block. I should. The greatest regret: don't not walking around the block.
Yeah, take a walk. So enjoy that moment of this, powerful, excitement, but then pause. That's the first thing. Second thing is that when most people don't realize it, and you've described it pretty well in your description, is that when you go from working in a professional environment with professionals and impressive people to starting your own fund, you're alone. You're going to find yourself in a little office, maybe one or two other people, or maybe a shared office or whatever, but ultimately you go from this environment of support and all kinds of exchange and all kinds of resources to just being, on your own.
Andrew, can I just describe it slightly differently?
Yep.
Yes, that is one scenario. The second scenario, and the probably more dangerous scenario, is that you go from being surrounded people who are more experienced than you, by being surrounded by people that are more junior than you. Right. So if you are going to start any form of business, be that a hedge fund, asset management firm, climate consultancy, whatever it is, you need to surround yourself with people who are more experienced than you are.
Yeah.
Right. Having a bunch of 28-year-old analysts who are never going to push back at you is really dangerous.
And maybe the point is that maybe you shouldn't really start that until you've got some experience in a structured place, leading people a bit. So then when you go there, you're a little bit more comfortable with it, I guess.
No one teaches you how to manage people. Managing people is horrible. I'm terrible at it. Horrible at it.
The challenge of a lifetime.
Yeah, everyone. Look, I mean, I am a people person. I'm known. I freely admit that I'm a people person. Horrible at managing people.
Yeah.
Horrible.
So let's go back in time. Based on what you learned from that story and what you continue to learn, what one action would you recommend our listeners take to avoid suffering the same fate? We may have already identified it. Take a walk.
It's walk around the block. But again, it depends on the duration of the investment, right? So if you're thinking about this as I want to buy some dollar yen today, I think it's going up. Have a think about what your process is. Where are you getting in? Where are you getting out? Treat everything with the same agnostic clinical process, right? There are no ideas. There are good ideas and bad ideas. There are. But you need to treat them once they're executed with the same clinical lens, because once they're executed, you're at the whims of the marketplace, and depending on the time frame of holding this, it will mean you could just get stopped out for random reasons. But you have to, if you get stopped out, you get stopped out. You start again. Starting businesses, I think, is a different kettle of fish. The grass isn't always greener. Right. Starting a business is really hard. I've started multiple businesses now. Some have done well. Most have done well. One fails. But it's tough. It's a tough thing to do, and I think there has to be a plan. There has to be an exit strategy. So starting a business, there has to be a stop. If it doesn't work for X years, if you spend X amount of capital, you've got to treat this in some ways like a trade. Right, because just as running a trade too long can lead to you getting wiping your capital out, the last thing you want to do if you start a business is to take it too far and suddenly realize that, oh, I didn't contribute to my kid's college fund this month because I had to plug a hole here and I had to do that. And also it's a function of being respectful of the people that you hire who have put their faith in you. Firing people is the worst thing any business owner can do, right? Because you're disrupting people's lives. So, and if you're disrupting people's lives because you haven't covered your bases and you've made rookie errors, well, that has consequences for their families as well. So, I think the one takeaway is just when you have that, let's use the expression walk around the block, but walk around the block and think about what are the scenarios where this can go wrong. And you know what? If you think that way, you will leave money on the table every day. But you may not face systemic risk. And I think that's the takeaway.
Great. So what's a resource you'd recommend for our listeners?
A resource you recommend, apart from climatetransform.com, I think that's something which is, again, it's something we're pretty proud of in terms of, it's all free. So just please jump on there. A resource that I would recommend for people. I'm going through a phase now, Andrew, where I am listening to every sort of full meditation podcast. There's a great podcast called the Doctor's Pharmacy with an FARM talking about food and the like. If I could recommend resources, I would use less resources. Right? We all know at our age, I'm 52, but I knew this a long time ago, what I need to do to live a long, healthy, and successful life, right? I know I can't eat pretzels before bed and pizza 3 times a week. And you know what? My alcohol consumption has collapsed because you know what? I can't wake up hungover again. And I know meditation's good for me, but I don't do it every day. And I've got a Peloton in my bedroom that I didn't ride this morning, and I didn't ride yesterday, and I didn't ride the day before, right? So I know what I need to do, right? So I think you can get, particularly with the podcasting world, right, that you can get utter paralysis by new ideas to implement, right, about spirituality, about business, about health, about all sorts of stuff. I'd use less resources.
Right. Okay.
If you're a smart person, you know what to do, right? you don't need to read another John Kabat-Zinn book about mindfulness, right? Because you know what? I think meditation is a wonderful thing. It's great for you. Do I do it once a week for 10 to 15 minutes? Yes. Am I a yogi? No. I know I should do it every day, but I don't. And I think it's actually a lot more calming when you appreciate, you know what? I did have some pretzels before I went to bed a couple of days ago. And
So
I
just
don't
do
meditate
it.
every day. And maybe the de-stress of not finding ways to de-stress, right, is actually just let things be as they are.
All right. All right. Last question. What's your number one goal for the next 12 months?
Meditate every day, go vegan. No.
Peloton,
Number one goal.
monetize.
So I do. I have work goals is we're rolling out Climate Transformed into live events. So we're working on rolling out 30 in-person events in 9 countries over the next 15 months, which is getting that done successfully is the professional goal. I do have a goal about trying to do 50 push-ups by the end of the year. And Andrew, I'm not the people who know me will laugh at this right now. I literally started off in the first week of January doing 2 push-ups. And what I've done is every week I've added 1 push-up. And I did 22 push-ups this morning. So literally I'm adding one per day. So every day, this week I've got to do 16 push-ups this week. And I did 22 yesterday. So if I add one set of so every day, 1 set of push-up, I'll get to 50 push-ups by Christmas.
That's exciting. In fact, I watched a video on someone doing that, a lady that was pretty impressive, and it made me think about it. So that's a good potential challenge for all of us.
And the only thing that will happen, Andrew, is there will be no video.
Yes.
I promise you.
And you're smart enough to know not to take the challenge of doubling it every time. So at least you just add more.
I have a 16-year-old who's already much fitter than I am. So I have that motivation as well.
Well, listeners, there you have it. Another story of loss to keep you winning. Remember, I'm on a mission to help 1 million people reduce risk in their lives. If you've not yet joined that mission, just go to myworstinvestmentever.com and join my free weekly Become a Better Investor newsletter to reduce risk in your life. As we conclude, Paul, I want to thank you again for joining our mission. And on behalf of A Stotz Academy, I hereby award you alumni status for turning your worst investment
I'm honored, Andrew. Thank you very much.
Yeah. And do you have any parting words for the audience?
No, I love this concept. I think it's a great way to get people to seriously think about the benefits you get from failing. The benefits of failing. And I think that's an important way to think about it.
We appreciate it. And that's a wrap on another great story to help us create, grow, and protect our wealth. Fellow risk takers, let's celebrate that today we added 1 more person to our mission to help 1 million people reduce risk in their lives. This is your worst podcast host, Andrew Stotz, saying, I'll see you on the upside.